We're back. Tech bellwether Intel easily beating Wall Street expectations for its fourth quarter results. The world's largest chip maker's $2.3 billion profit, nearly 10 times more than the same quarter a year ago. But let's face it, a year ago we were going down the tubes. Let's go inside the numbers with Doug Friedman, senior semiconductor analyst, Broadpoint Amtech. Good morning, Doug. Thanks for being with us.
Good morning, Mark.
I thought this number was better than expected, but the stock is down. What's going on?
Yeah, the numbers were great. We really think this is a rotation for investors to look at. This is a value name now. People are tend to look to semis for growth, and people really need to focus on Intel's value, and we think this stock's going to work over time.
Intel is a value stock now?
Well, if you look at the multiples, it's at a historic low multiple, and we think the business case for Intel has really changed, and people are trying to invest the old way. Buy it when its gross margins are 50, sell it when its gross margins are 60. We think we're going to be in these 60% gross margins for quite a while.
Okay. Does this situation, is this company specific, or should we be looking further abroad in tech?
There are some company-specific things going on here. The one thing we try to highlight to investors is Intel is on a new manufacturing facility. Their factories are going to really be in production for much longer. In the past, they had an investment cycle in their factories that caused those gross margins to be very cyclical. We don't think that that's going to happen for the next 3 to 5 years.
Doug, you might have right and justice on your side, but what happens about the fact that overlaid on Intel is this huge crowd into the tech trade in general, which of course has bid the whole sector up really quite dramatically over the last quarter? I mean, what notice do you pay of that? Where does that take us? And are we going to see more of this buying on the rumor, arguably selling on the fact?
Yeah, I mean, you're absolutely correct. I mean, we've had a nice recovery. The one thing that we highlight, though, and the real takeaway is last year when we had the financial crisis, consumer demand was expected to be down dramatically, 20, 30%. When we look at sales of consumer electronics, units in some cases were actually up. And I would say a conservative number is units down 10%, much less than expected.
Let's just pick it up with Doug again. We were talking about Intel's earnings just before we had that important data. Doug, you were talking about how you felt that the consumer side was doing it for Intel. Isn't the bigger bet actually the degree to which we get industry, commerce, enterprise coming back next year, and the cycle turning from minus 8% last year in that space to arguably 8 or 9 if you believe Forrester?
Yeah, we agree. We're looking, that to us is going to be nothing but upside to Intel's numbers. We do believe that a lot of the spending on the IT side is going to go towards the server market, which is the highest gross margin piece of Intel's business. So we're extremely bullish on the server market.
And briefly, what other companies would you link into that?
On the server side, if we just look at the enterprise, we're very bullish on the hard drive space. The memory sector actually benefits from it. And there are a lot of other smaller power management plays that can go into the server side.
Okay, Doug, thank you very much for that. We'll watch how Intel trades during the rest of the session.